Hi there everyone, this is Terence Tan, the Impossible Investor. Now, so I'm just going to provide all of you over here a market update. Today it's the 21st of August over here. Alright, so we're going to do a market update for what the market did on the 20th, alright, which is last night. Now, so having a look over here on the S&P 500 in the US market. So market has started the week strong over here. Alright, as we saw, it opened up strong throughout the week and the strength has maintained throughout Tuesday. But we do see the volatility that is still in place in the markets, as we see that the market has actually closed at the low of the session over here. Alright, and that points towards more volatility or swings towards both sides throughout the rest of the week. All right, I say this because coming up, what's next over here is we have the FOMC minutes followed by the ECB minutes, which is the European board over here, kind of like the Fed Reserve for the European countries over here. Their minutes are going to come out, and the deciding factor over here is we actually have the Fed chairman right now, Jerome Powell, actually delivering a speech on Friday when the market is actually open. So all this is going to point towards a lot more volatility in the markets. What's going to happen, I really do not know, but it's going to provide a lot of swings in the market. That's something that of what we expect going forward. Now, but just to sum up a lot of the weakness that we're seeing in the markets right now, which means let me kind of change the time frame over here. Let's say on a day-to-day basis. So what you're seeing over here is, if I expand the time frame, we see a lot of weakness over here in the markets over the last few months. Okay, I don't have it in my range over here. Let me pull it slightly further. Okay, now, so we've seen the market recovered to a strong level towards the high of 3,000s over here, right? And then, of course, we see the sharp sell-off over here ever since the trade war started. Now, so what's really causing all these issues over here was the beginning of the trade war, all right? And let me just highlight further in terms of, for your understanding, why is the trade war actually important for investors out there. Okay, now, so just to take a look at it over here, the first importance over here is if you look at the composite of the S&P 500 index, IT sector itself composites almost 20% of the components of the index, all right, when it comes to the S&P. Now, and as we know, IT companies are very heavily involved and affected by the trade war, because a lot of them have dealings with Huawei and the technologies involved in China as well. Now, so this has caused a substantial pressure in the markets over here, and actually adding more on to that issue over here is the deal with financials, because if you look at it over here, the financials weigh right now about a 14% weightage of the entire index. So they are main component of the index itself as well. Now, so if you look at it right now, what we have over here is a worldwide interest rate environment where a lot of countries are actually starting to lower their interest rates, and this is all down and pointing towards a weaker economy. But the whole trick right now is actually in the US economy is still pretty strong compared to the rest of the world. Now, so Jerome Powell or the Federal Reserve actually have a difficult situation right now, because economy is good, so they shouldn't be really lowering the rates as much as the other countries do. But at the same time, when the other countries are lowering their rates, what happens is the US currency becomes much stronger over here, and what then happens over here is a lot of the money is going to plow into the US bonds because of the highest return over there, and that makes US dollar strong and it loses its competitivity. Now, so you know, the right frame of mind, which is what Trump wants to do right now, is to compete on who goes down the fastest, right? Since others are lowering their interest rates, he thinks that the Fed Reserve should actually go double speed over here and lower the interest rate even faster than the others. Now, so this has caused a lot of pressure on the financial sector. All right, I say this because when we are in a lower interest rate environment, the bank can't really charge much higher rates in order to loan out their money. All right, which then means that profitability of the whole business drops. All right, and we all know how the stock market works over here. When profitability drops, all right, the stock price actually comes down along with it. All right, so it's all down to the profit numbers over here. Now, so if there's going to be a drag on the financial sector over here, we're going to see it played out in the S&P. Hence, a lot of volatility and a lot of weakness is going in the marketplace right now. Now, so if we look at you know, a bond simulated product over here, I'm looking at the Treasury bond ETF. Right, what we can see over here is a quick surge from July 31st, right, which means the end of July over here to where we are right now in the month of August. right? So you can actually see that during the period of time, this particular stock over here, right, went from $132, right, up to a high of about 147. Yeah, right now. So there's a quick substantial move over there of almost $10 over here, right, within just a short span of about a month. Yeah, okay. Now, so this particular stock over here moves up as interest rate comes down. So you got to think of the correlation over here. So interest rates down, the TLT Treasury bond ETF actually goes up in price. Now, so what we're seeing over here now is this: when the Treasury bonds or TLT over here goes up in price, you would see the substantial difference in movement over here being inflicted, all right, on the, how do we say this, on the XLF, right? The XLF is none other than the financials ETF fund itself. So it's a composite of the major banks over here, or the bank stocks in the US stock market. So you can see it's almost the same period where the bonds go up over here in prices, and the XLF, which is the component of the the financial sector stocks, actually started going down. All right, now, so this is the main thing that's happening and putting a drag in the markets right now. So a lot of people think that the trade war is still the main component right now, but it's actually the interest rate environment and what the US is going to do with the interest rates. Now, so right now you got to pick on stocks over here that are prime for safety over here, because the market is going to get riskier, it's going to get more volatile, right? But that doesn't mean you should stop trading, because there's still a lot of good stocks that are presenting bargains right now. So you just need to know what to hunt for over here to keep your portfolio safe, all right, and make sure that you know how to pick out your trades, so that you don't have to worry about further sell-off over here in the markets. Now, so Impossible Investors are trained to do this, so we are constantly looking out for opportunities out there, all right, to constantly rake in our performance over here, or our returns on a week-to-week basis. Now, so this is what I have for the market summary update over here. All right, expect a lot more volatility to come in over here from tonight's session all the way to Friday, because we have a lot of rate announcements, which is going to move the stocks, the banking stocks over here, and in return reflect on the S&P 500 itself. Now, so expect more volatility over here, all right, and if you're a trader of volatility, you'll love this environment, and if you're an option seller, you should actually love this environment as well, because as volatility picks up, option premium actually increases in value and prices, and if you're a seller, that means you're selling the same or almost the same thing, but at much higher cost right now. So enjoy your day over here. We'll see what's in store when the US market opens for tonight's trading later tonight, and I'll catch you in the next market update I'll be doing. This is Terence Tan, the Impossible Investor, signing off over here. Till the next video.